Gimme, how you doing today?
Jeremy, I am doing wonderful. How are you?
Real good, thank you. Today we're going to be talking about Bitcoin and the Bitcoin ETF in particular.
All right. Exciting topic.
It is, and this is something that has come onto the scene here this year in 2024. And, I would call myself a little bit of a Bitcoin curmudgeon.
Sure.
I'm not a super big believer, but I'm also not against it. I did, full disclosure, buy a little bit of the ETF myself.
Okay. Yep.
I bought it and then it proceeded to go down.
That's usually it's what if the waiter starts buying Bitcoin, that might be a time to, or telling you about buying Bitcoin, it might be a time to think about how much you hold.
That's right. So it was a very small bet for me.
Yeah. That's important.
And that's something I'm sure we'll talk about here today, but we're going to get into it.
Let's go.
Wanted to start out with the simple big picture that says, what is an ETF?
Right.
Right. And we've used this napkin finance before. I think these are a pretty good way of explaining what some of these different concepts and vehicles are in finance.
Yeah.
And so, an ETF, it's a basket of investments.
Right.
Traditionally, it's been stocks and bonds.
Yep.
And it's been more traditionally on the passive side where you're trying to track to an index like the S&P 500.
Exactly.
And it's got a variety of different benefits, right?
Yep.
So, just throw out some benefits.
Yeah, I mean, look, I think the big main takeaway is, an ETF is very similar to a mutual fund, which I think are better understood given how prevalent mutual funds are in, employees' retirement accounts, 401ks, 403bs typically loaded with mutual funds. An ETF very similar to, mutual fund, like you said, a basket of stocks or bonds or some sort of combination of them possibly. But the ETFs can trade during the day, whereas a mutual fund trade will settle at the end of the day. The ETF can be traded throughout the course of the day, like an individual stock and an individual bond.
Right. So it plays much more like an individual stock, individual bond. And it's important to say in the context here that other assets can be put into the basket as well.
Correct.
And that's something that Bitcoin is.
That's exactly right.
So what is Bitcoin? What is Bitcoin? And this is look, I do not pretend to be an expert in the cryptocurrency space.
I don't think either of us are.
And that's fair, right? But we're just setting the table here, letting people understand it's a cryptocurrency, a virtual currency designed to act as money or a form of payment outside of the control of individuals. It's a decentralized money form.
Yep.
And I think that's, there's almost a religious following to some of this stuff where there's a lot of detail around it, but at the end of the day, it's supposed to be a currency and it's supposed to be decentralized.
Right. I think the blockchain, right? That's been, for the different debates that have gone on, regarding cryptocurrencies and Bitcoin in particular. I think that there's a school of thought for some period of time and still exists today, but maybe Bitcoin isn't the real value here. Maybe the blockchain, this ledger is where the real value is long term. But who knows? But yes, I think that decentralization is one of the key benefits, or the folks that are very pro Bitcoin or cryptocurrencies like the fact that it's a decentralized currency, right?
Correct. Now, I think, if I'm poking holes, you could say, is it being used as a currency? I mean,
how many pizzas have you bought with Bitcoin?
I mean, famously, there's been at least one South American country, I think it was it Venezuela?
Yeah,
I'm not sure.
So.
That tried to turn to Bitcoin as a currency, and it was, a disaster.
Yeah.
But they were already dealing with massive inflation and issues with their fiat currency, right?
And I think that's one of the pro arguments for Bitcoin, for those that are big supporters and believers, is that for some of those underdeveloped countries whose currencies are far less stable than the U.S. dollar, that Bitcoin could be a nice way to balance things out for them. In theory, right? But in practice, it might not actually hold up the way that the theory wants you to believe.
Right. I'm going to go off on a real quick tangent and say when I was in college, I went to Ecuador to learn Spanish, and I remember that while I was in Ecuador, they were changing their currency from and I can't remember the name of it, and it was going to American dollars and cents.
Wow.
And we literally saw C-130 Air Force jets come into the airport, and they were bringing money in. And while I was there for 6 months, I saw that the changeover of the currency take place, and they were looking for stability, right?
Yeah,
so
right.
now people in a more modern day age are looking for that stability and perhaps a digital currency. We'll see.
Right.
We'll see.
We'll see.
These are possibilities for where the Bitcoin could go in the future, cryptocurrency in the future.
Yep.
But today we know this. It's gone to an ETF exchange system, so it's become a little bit more viable. We're going to talk about that.
Yep.
So it was January of this year that the SEC actually ruled on approving Bitcoin ETFs,
Right.
spot ETFs for Bitcoin.
Correct.
Now there are some 20, maybe 25 of them out there.
Of course.
So there's a lot of them, and there's some we'll talk about who's going to be the winners and losers type of thing.
Right.
But what we do know is that this changes the game significantly, right? Because you used to have to own the individual Bitcoins. There was a wallet associated with that. There was some real inherent risks and some challenges, some barriers to entry, perhaps, is the best way to put it.
Yeah, I think the one thing that I would say that I think is a huge positive for Bitcoin and cryptocurrencies with the approval of the ETF is the safety and security around it, right? Like owning it on a stock exchange, or you can own it in your Schwab account, right?
Mm-hmm.
I think provides more stability than when you were, some of these people who like self-custodied on their ledger, right, where they've got these thumb drives that they've got this Bitcoin stored on. And you heard these horror stories though, right, about people who had forgotten their password, and these tokens were like, passwords were super complex, and
people throw out a hard drive and they go to the dump looking for their hard, where there's millions of dollars.
Because now it's worth millions of dollars, right? And it's crazy to think about. But so the pros, the sword cuts both ways on that. It's the self-custody, which decentralized, great. However, if you lose your password, your value is gone.
Yeah.
Right. Whereas here, the ETF, it's like I log into my Schwab account. I can see the Bitcoin ETF that I bought. It's there, trades on the New York Stock Exchange. Much more, reliable, I would say.
So this was a quantum leap forward for the industry, if they're going to find widespread acceptance. And despite that, it felt like Gary Gensler, the SEC chairman, was a little bit hesitant about this. He seemed like he had to be dragged across the finish line on this one.
Right.
And he's indicated such. You can see that the quotes there. Basically, he's urging caution to the investor community.
Right. Well, and we've seen a lot of, look, U.S. dollars get used for committing crimes to pay off for crimes. But that's one of the knocks on the cryptocurrency or Bitcoin was that so much of it was nefarious use, right, and untraceable. But paying, if you got your information got hacked, somebody might hold you ransom and demand Bitcoin in the form of payment. Not that U.S. dollars haven't been used for things of the same nature,
sure.
But Gary Gensler's caution here is easy to understand.
It is, but we're there.
Yep.
And the industry has accepted it, and to your point, now you can go on to a platform that everybody is familiar with and feels safe with, and they should, and they can buy one of these ETFs.
Yep.
As mentioned, there's a couple dozen of these now. The top three I put up on the board here for us to look at. You've got Grayscale Bitcoin Trust. Now, Grayscale has been sort of a forefront player in this space.
Yep.
They were doing the futures trust for a period of time.
Correct.
And this has turned into a spot ETF now.
Yep.
Got the iShares, that's from BlackRock.
Yep.
And you've got Fidelity and theirs. So these are the top three. These are, you're probably going to have a pretty big separation. Again, there's a handful of others that are doing really well too.
Sure.
Our goal here is not to give you the universe, but just talk about them in general.
And we're not promoting any of these. We're just, recognizing who's gotten the flows thus far.
Exactly. It's worth pointing out the fees.
Yeah.
And this is always a big thing for us here at On Track Wealth Management. We are we're really pretty focused in on what the manager's fees are.
Correct.
Because we know that's a big a big headwind for investors. If they're too high, it's just going to be problematic to have long-term sustained returns.
Absolutely. Cost has proven over number of studies to be one of the best indicators of future performance, right? If your fees are high, it's going to be it's tougher to provide good return to the client. Whereas if the fees are lower, and that's what you're seeing here. I mean, there's quite a difference here with the grayscale being at 1.5% per year, compared to 12 basis points and 0.25% for the other fees. I think if you look at the range of the other Bitcoin ETFs, you're probably in that 15 to 20 basis point average.
Yep.
So yes, look, we are very fee sensitive here. Something certainly to keep an eye on.
So one of the positives about this going to an ETF is, again, as a very efficient wrapper, and you're going to see the fees, I think, generally stay or come down even further potentially.
For sure.
Just due to competition.
Yep.
So what is Bitcoin in terms of its asset similarities, I guess I want to say?
Yeah.
What is it like?
Yeah. Well, this is where we've seen, so we've got the treasuries, gold, and Bitcoin here, right? And I think, digital gold is kind of a way that, some people view Bitcoin, right? As a store of value. How effective is it at being a store of value? I'm not exactly sure, but I think it's, you compare treasuries and gold and Bitcoin. Bitcoin has, again, been compared to digital gold, but by many. But so what you're looking at here in this graph, the green boxes are good. Mm-hmm. The gray is sort of neutral and indifferent, and the yellow boxes would be not so great.
Yeah, yeah. So Bitcoin has a few things that it really has going for it. In particular, it's decentralized. Yep. Its supply is fixed, right?
Right.
There's a finite number.
Yep.
Of Bitcoin, as I understand.
So that's what we're told.
We'll see.
Yeah.
So it's interesting as a store of value, and there could be a full debate. We could have a whole session on whether you should be investing in things that are stores of value,
right,
or not.
Yeah.
When you look at, say, a stock, and you compare, you're buying ownership in a company. That ownership in a company is run by hopefully smart management teams and good employees,
right,
with a good product and a good service. They have the ability to zig and zag when the markets kind of change. With some of these other things, these stores of value, they lack dynamic,
right,
qualities.
Yeah.
They are sort of intrinsically what they are.
Yeah, there's no income being provided, right? There's no dividend yield. There's no easy way to, use like a discounted cash flow model to assess the value of it.
Yeah.
Is it overvalued or undervalued? It's, it sort of trades a little bit on fear, right? And, your Bitcoin is worth what somebody else is willing to pay for it. Same way with gold. There's no interest being paid, no dividends. So to your point, you got invest in the S&P 500. You've got the 500 largest companies in the U.S. with very bright minds running these companies, where they can, to your point, be dynamic and utilize technology to increase profitability and then distribute earnings to the shareholders. That's not the case with stores of value.
Right. So there's positives and negatives. It's kind of like anything. There's a yin and yang. So to cap off this two fiduciaries on the Bitcoin ETFs, just what are some of your thoughts? What are some of your prevailing thoughts around what this looks like for the average investor? Should they be considering this? If they are considering this, then what?
Yeah. So again, as the point I made earlier, I think that the fact that you can now, gain access to the asset class, to Bitcoin, tracking the price of it in an ETF, there's a lot of confidence in the stability and security around the way that you own it, in the ETF. But I think it's super important with any investment. This is not unique to Bitcoin or any of the other cryptocurrencies out there, but I think sizing of your bets is super important, right? And understanding how much do I own of this, and the way we run manage money for clients, we have strategic long-term targets for different asset classes. And if a certain asset class performs very well, you have to have the discipline to be willing to trim and rebalance back to your long-term targets. So I think one of the key messages I like to get across is if you do own it, be aware of how much is it 1% of your portfolio, is it 5%, is it 10%? Academically, we've tried to keep individual holdings here at OnTrack at 5% or below, regardless. I don't care if we're talking about Nvidia or Bitcoin. It's anything over 5%, you start to get a little bit outsized in that one position. The over concentration risk there is can be real. So if you do want to have access to it, I think the ETF is a great way to do so. But I just think it's really important to understand where does it fit in your portfolio and how big is the bet that you're making on that asset class.
Great point. Those are great guardrails. So you're saying in summary, keep it at 5% or less. That's our guardrail strategy around this. I wanted to talk briefly about some of the psychological side of this. I think there's a massive fear of missing out that's playing itself out with respect to these cryptocurrencies. I can personally attest to that. I think that's probably why I put a little bit of money into it.
Right.
And so I think that's just something that as investors we should be aware of. There were early adopters on this who've rode the roller coaster up and down.
Yeah.
Some have done well, some have not done well. It really comes back to what are your risk tolerances? It's going to be a volatile asset class. There's no doubt about that. That's shown that capacity throughout its short history.
Yep.
So just be aware is what I'd say, and don't fall trapped to fear of missing out. Just in and of itself, not a good policy to have when it comes to investing.
Yeah, no, and I think that's again, we're talking about Bitcoin because it is it's a very polarizing investment, right? And it hasn't been around super long, but it has had some volatile swings, and just again being disciplined to know what you own and in what amount do you own it, I think is critically important.
Well said. Well, that's it for this Two Fiduciaries. Thanks again.
Thank you.
All right. Have a great one, everybody.